Hey guys, I hope you're doing fine. My name is Matthew and welcome to my channel. Here are the things that I wish that I knew when I first started stock picking. But first I'm going to go into a little story about how I first got started stock picking and what that looked like for me as a real-time beginner. So here we go. Now I remember that I started my stock market journey in the middle of summer from my junior year of high school to my senior year of high school. Now I'm in my senior year of college and boy have we come a long way. Now I remember that the first stock I bought was actually Facebook stock, and that was about $700 of my money bought on a vacation with my family in Hawaii. Now I was telling my dad, I was like, oh, I'm buying Facebook stock. He's like, okay, cool. Good thing you're getting to the markets. I felt like a legend, right? Now at that time, I remember that I was only willing to put in $700 to invest because I knew the risk going in and I didn't want to lose all my money in the first ever investment that I had. Now in my junior year of high school, I actually worked as a swimming instructor and I also did DoorDash on the side. Now pro tip, DoorDash actually pays quite a lot. I was averaging at $23 an hour just by driving around listening to music and delivering food. It's pretty fun. So with some of the money that I was able to get from that job and doing DoorDash, I was able to save up enough money to throw into Facebook stock. Now I saw that their stock price in 2018 was actually pretty low due to this Cambridge Analytica scandal. Now with the Cambridge Analytica scandal, Facebook actually dropped by double digits and I was like, whoa, okay, I gotta see something here. What's happening? Because I use Facebook all the time because they own Facebook, Instagram, WhatsApp, and Oculus, right? So I'm like, okay, I am a person who was in high school that uses social media. Now, everybody is going to still use social media later on, including Instagram, because all these high schoolers, we like to use Instagram to post about our friends, post about our family, and so be it, right? So I was actually going on Instagram and I was like, okay, Facebook actually has some really great products here that they're going to use and monetize these ads very heavily in the future. Because I know that a lot of businesses that I worked at in the past, they like to use a lot of Facebook marketing and they like to market their business on Facebook. So I was like, okay, I gotta buy something here, and I don't think this Cambridge Analytica scandal is going to go that far, that fast. Let's take a risk with it. Also, there are a lot of articles stating that a drop in Facebook stock isn't the end of the world because Facebook is still a great company at the end of the day. Now, as a high schooler, I believed pretty much everything that I read online, and I was like, okay, let's take a high flyer on it. Now, my junior and senior year of high school, as well as my freshman year of college, I really went through it all. I went through options trading, day trading, swing trading, how to make money 50% in a day, and also just investing in things that I really didn't know. Like finding the next FDA approval for biotech stocks. Now if I learned anything, it's one thing for sure. It's that you need to smash that like button down below. All it takes is a little click, make that like button turn blue, and I'll be a happy man. Thank you guys for that, and let's continue. Now I am half kidding about the like button, but if I learned one thing for sure, it's that I completely sucked at those. And I mean it, I really sucked at them. It was like taking a child to the casino because I really went in there not really knowing what I'm doing, and you hit or you miss. Now I remember that I actually even tried to short the market with the ticker symbol SPXS. Now the SPXS, or the Direction Daily S&P 500 Bear 3 Times, is an extremely aggressive bet against the S&P 500, promising to provide negative 300% of the index's return for a one-day period. Now in simpler terms, if the S&P 500 goes up 10%, the SPXS will go down 30%. So you can really see how much more volatile it is, and you're really trying to go against the market. Now as you can imagine, as a noob, this didn't go well. Now as you guys know, the market usually tends to go up year after year, and sometimes we'll have hiccups. However, if you hold SPXS for an extended amount of time, you are going to be degrading your returns and degrading your initial investment because the market's going to go up, but this is going down by 3 times, right? So you're kind of in the situation of you need to cut your losses if you're down too big. See, I didn't know that my position over time would just be slowly bleeding out, so I held on to it for quite some time, and I realized that I was down nearly 50%, and it was pretty bad. Now it's something that still haunts me to this day, and I think that it's really important to shed light on these kind of activities that are losing people's money. Now I found that investing in shares of companies was actually captivating most of my interest, and that was where I had the most success. Now from the get-go, I understood that having shares meant that you are a part owner of the corporation and that you should really care about what's happening inside that company. Some of the things that you might want to worry about are, do they have a new CEO? What are their new products coming out? And what are their new strategies for the next quarter or the next coming years? I understood that if a stock went up or down within a single day, there's likely a reason for it. Now, with the internet nowadays, you could pretty much find what happened to the company in a matter of 10 seconds. Now, when I first started investing, I was really captivated as how much a company can move up or down within a given day, but I was like, at least I know why they moved. Oh, they beat on earnings? That's really great. At least I know. Now, as it captivated so much of my interest, I began going down this rabbit hole of being obsessed with looking at the stock market, just looking at different companies and seeing what they're all about. I remember looking at so many stock market charts, looking at all the products that these companies had, and just really looking at these videos on which stocks to buy. However, when I was watching these stocks to buy videos, I realized that they weren't teaching really valuable lessons in stock market investing, as in what is a price to earnings ratio, what is a price to sales ratio, what is market capitalization, and what are gross margins, right? Because that was all foreign to me at the end of the day, and I was like, okay, I need to learn a lot more because I don't understand what this person is saying at all. So I had to go back to the basics, rewind, take a step back, and learn everything myself. So instead of watching those stocks to buy videos, I watched how to evaluate a stock, what it means to invest in a company, and what that means for me as the investor. Now, watching these videos helped me so much, like how to read a balance sheet, how to look at valuation metrics, and how to evaluate a management team. Of course, I didn't pick this up in the first few videos that I watched. I watched probably 20 to 30 videos on how to look at stock market valuation metrics. And it really was just repetition, learning everything myself, and just watching these videos because they were so much more helpful than just somebody telling me, here's what you need to look at, here's what a good PE ratio is, but it's really helpful. And at the end of everything, I actually understood a little bit more about what it means to buy a great stock versus what it means to buy a terrible stock. Now, I remember some of the first companies that I ever bought were Alibaba at $175, Facebook at $165, and Tesla at $65 adjusted for the split. And these companies today, boy, are they worth more than they were in the past. Unfortunately, I do not own any of these as of today. For Alibaba, I held it for about a year. It did nothing, so I was like, okay, let me get rid of it. I can put my money somewhere else. And I guess it did pay off because some of the other investments that I put it into were actually doing very well. But nevertheless, Baba was up a lot more than it was when I bought it, and that was a great investment as well if I held it. Now, Facebook, it rose all the way up to $280. I dumped it, and I took a quick profit there. If I held it till today, they're worth a lot more than they were in the past. Now, I remember Tesla was at $2,000 a share before they split, and I was like, okay, I gotta get rid of these massive profits because I'm up so big on it. And that equates to about $400 in today's stock price. And man, are they up a lot more than $400 today. Now, something that I learned from this experience was let your winners ride and let your losers lose. You really want to let the companies that are doing well, that you know will do well in the next 5 to 10 years, to really play out and to let their stock prices appreciate. And those biotech trash companies that you're buying that are down 30, 40, 50, 60%, you may want to reevaluate that company and look back into the business and see, is what I'm looking for here still there? Because a lot of the times those small companies that you don't really know what they're investing in, those are the most dangerous and those cost you the most money. Now, if you truly own a great stock, you shouldn't have a problem with taking that company to the grave with you or taking those shares with you to the grave. Now, as Warren Buffett once said, if you had a stamp card with 20 stamps on it, but it was the amount of companies that you could own in your lifetime, you would be very concerned about which companies you'd buy, and you'd be very picky about which ones will do well and which ones will not do well. And you'd be sure to make a great investment there because you are so tied down to so many limited choices. Now, overall, you would do a lot more research into the stock, which may grant you a higher ROI at the end of the day. If you're going to take anything from this video, please, please, please let it be this. See the world through the eyes of an investor. And what that means is just that when you're in public, when you're going out shopping, make sure that you're looking at the companies that you're walking past every single day because there are opportunities that lie within there. Let's say you really like this product and it's a really smash hit and they're selling out like hotcakes. Now, that is a company that you want to look into to see if you're even able to invest in that company. Some of the things that I look up are, is the company public? Or who is the parent company or the company that owns this smaller company? But more importantly, can I invest in them? Now, you already have an edge over other investors because you already see how poppin' business is in real life, where Wall Street doesn't have the opportunity to walk up into every single business and look at all the products to see how fast they're selling. Of course, after you identify a really hot product, you gotta make sure that you look at the company's financials and just look at what the company has overall going for them. Something that you really need to look at is competition, and are their competitors selling out? Are their shelves stocked? Or are they empty for the majority of the part? Remember that the companies that you own in your portfolio have real world products, And it's your job to look at the stores and look at every single thing that they're doing, their online website. How is the inventory doing? How much shelf space do they really have? And do they have competitive advantages over other companies? At the end of the day, sometimes looking into a company and just looking at their competitors or whatever's on their shelves really gives you more confidence as an investor, because you're like, oh my god, this company is selling out so many products every single day. I would not mind investing my hard-earned money into this company so they could compound that for me. Now, I know that everybody seems like a genius in the stock market when there's a bull market. At least that's the verdict online. However, there's going to be years that are really great for investors, as well as years that are really terrible for investors. Now, it's your job to just maximize your gains as much as you can and really not freak out when things go south, because likely things come back, as we saw in March of 2020. Heck, every single day I'm still trying to learn as much as I can in the stock market and just trying to be as versatile as I can to make sure that I don't lose as much money as I've lost in the past. Now, I'm trying to maximize these gains the best I can, and that's just through learning. And I think that's one of the greatest skill sets to have. As time goes on, I know that my hard work and dedication towards learning something new will pay off. And really, it will pay off in terms of money and in terms of lessons learned. That wraps up about today's video, and I really hope that you guys enjoyed learning about my experiences and what it really means to be an investor in the stock market. Make sure that you hit that like button and subscribe down below if you want to hear more content around stocks, investing, or just business in general. And did you guys fall victim to any of the experiences that I went through in the past? I really want to know. Let me know in the comment section down below, because I really want to hear from you guys. Anyways, have a great day, guys, and peace out.